The NASDAQ 100 continues its slump amid a time of fear and uncertainty. When is the time to buy up tech stocks following the 20% drop from the start of the year already? My name is Connor, the Senior Market Analyst at the global brokerage firm Zenfinex, and I provide forecasts on various different markets on this channel on most trading days. If you enjoyed them, make sure you hit that thumbs up button and subscribe to our ever-growing channel. Today's video will cover a NASDAQ 100 forecast following the war in Ukraine. Enjoy. Okay, so having a look at the current catalysts for this index, and I think there's really two, and if you watch my short video, you'll know the two I'm going to be speaking about today. And number one, really, I think the timing, obviously the pace and the volume of the Federal Reserve interest rate hike remains extremely relevant, despite what else is going on, like the war and stuff. People need to remember that in terms of the NASDAQ 100 and risk assets as a whole, and inflation, what the Federal Reserve are going to be doing in the next few weeks is going to be really, really critical. Tomorrow is a crucially important day for the Fed, with turbulence in the market clear to see. It has the highly difficult task now of trying to guide the economy through these times with a stable monetary policy outlook. Now, Jerome Powell is the chairman of the Federal Reserve. He stated his ideal scenario being a 25 basis point increase in the Fed funds target range at the March meeting. However, there is growing concern that this does not do enough in an economy which is seeing rapidly rising living costs and also economic growth as well. Now, of the 9 voters tomorrow, there could be 5 or 6 who vote for the 50 point basis increase instead of 25. These sorts of conditions are really damaging for risk assets such as the stocks seen in the NASDAQ 100. Now, normally this would be the only real driver in the market to speak about, with a few more others in the background, but we have 2 really at the forefront, and as you're fully aware, these are unprecedented times at the moment. Developments in the Russia-Ukraine conflict, the Russia invasion of Ukraine, are adding to headline fear, investor caution, and also really large volatility. Now, officials from both sides held a 4th round of talks yesterday, but there was no progress announced. There's been little progress really since it started. The outlook in Ukraine does change every day, and I understand investors are clinging on to these peace talks as the real hope and the bull case in the market this week. However, it has been reported that Russia and Ukraine still remain way off in their negotiations. So unfortunately, I think there's some more destruction on its way, and this will continue to spark fear and uncertainty, and an environment where the risk assets will struggle, like the NASDAQ 100. Now, to conclude, I still believe, if you watched my 2022 forecast of the NASDAQ 100, I still believe that the first half of 2022 is going to prove really, really difficult for the NASDAQ, just like I predicted. This means another few months of turbulence is likely to be upon us investors. And when you factor in the conflict of in Ukraine now as well, it becomes clear as to why these short positions are really stacking up. This is a short-term bear market. Let's take a look at the chart to see where the bottom for this index may be. Okay, so I'm on the chart for the NASDAQ right now, and it doesn't look great really, as you can see. This is the all-time highs when we printed up at 16,770 or something like that, and we've gone as far down to just below this 13,000 mark. We actually nearly created a new low yesterday. It really closed in a bear market. Now, this drop actually equates to 22.7%, as you can see. Now, I'm reading many analysts that think that with the current situation at the moment, with the war in Ukraine, and also the fact that there's a need for obviously interest rate hikes and inflation being at like ridiculous levels at the moment, that we're going to see something more like a 30% drop. And we'll actually move this counter down towards something like a 30% drop. It takes us really to this bit of price inefficiency that we have here back from October 2020. Now it takes us into here, and I'm going to mark that really as a potential level that I'd like to buy from this year if we did get down towards this 11,500 mark. People may, obviously the bulls out there probably think that, there's no chance we're going to fall down to here, but I do believe that, sorry, it's imbalance, mark that as imbalance. I do really believe that we could fall down into this level, and there's 2 levels which I'm looking out for where I'm going to be looking for any potential buying opportunities. The first one, of course, is the one down here. because I must be said, I'm not really interested in shorting this market as such, because the turnaround can be quick. But I would have my stop loss maybe just sitting below these lows, literally down at 10,000, which seems ridiculous. And I'd probably be a really long term trade, as in like a couple of years holding trade, or an investment as such, would you call it, rather than a trade, up towards these all-time highs at 16,800, around a 6 risk reward trade. Alternatively, you could move your stop loss just below these lows here if we did get that far down. The second level I want to look out for, and let's get rid of this, is this level we have here. It's this low that sticks out to me the most. Now, if we were to break below this low, which is down at 12,900, I can't see how we won't close below this low. If we were to do that, then I see really no reason why this market won't fall down in towards this 12,200 mark. From here, we could be looking for a bit of consolidation pattern, and then when we do get this nice a clean break of structure like we did back in February 2021 when we broke to the upside, wait for the retest, so it might look something like this, and then go looking higher to maybe towards that 15,000 level. So they're the two levels for me, these two lows here. There's likely to be a lot of liquidity sat below. There's probably a lot of sell stops sitting below this one in particular. So they're my potential bottoms of the market, because that's the idea of this video, where I think the bottom may be. If I add in a few of the moving averages, you can see that we're actually comfortably trading below this 200-day moving average, and we now have what some traders like to call the cross of death. And what this means is, and I'll mark this for you, is we have the lower day moving average, the 50-day moving average, crossing over and below the two higher moving averages, which is the 100 and the 200-day moving average, which is a classic sign of a bear market. And as you can see, the drop-off that we're having at the moment is quite steep. And if I go on the relative strength index for you, you can see that this market, we're actually seeing some real clear divergence in this market as well. You can actually see that although the market went from this low down to this low, you can actually see at that exact same time, the RSI went up. The market actually, according to the RSI indicator, was getting stronger, yet was making, so that RSI divergence is really clear to see. And there just isn't much case for buying the market right now. The only case you could have is if I scroll right in on this price action now, and you can see here that we've created this liquidity pool underneath this low here back from the 24th of February. We did actually break up, and then we respected this order block here, this order block you can see here, and then we started to move further down. And as you can see, depending on where today's session closes, so I'm not sure when you may be watching this video, if we can get a snap above this level here, then we could class this potentially as a liquidity grab onto the downside, because we've broken below this low, and we may see a situation where we actually snap up and go and test up these highs once more, and maybe take some top side liquidity, or maybe if we're a little bit more cautious, maybe even just these potential equal highs here. So for me, to conclude for this video, the bottoms of the market I see coming for the NASDAQ are down at around 12,900 as an optimistic case. My more realistic case is around this 12,200 level, and my more pessimistic case, if we were to get that 30% drop in stocks this year, would be down around this imbalance, which is sitting around the 11,300 mark. I'm a buyer from this level down here. I'm waiting for a reaction down here, and I'm still a seller up here as well. So that's it for the NASDAQ today, guys. I hope everyone's enjoyed this video. Where do you think the bottom is for the NASDAQ? I mean, of course, we're plucking numbers out of thin air. No one truly knows. That's just our prediction for it, and I'll be interested to hear your thoughts. Make sure you've liked and subscribed to our channel, and also give this video a thumbs up if you did enjoy it. That's it for today's video, guys. Take care.